Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Colorado. Welcome back to the show, Rick, and happy voting day in the U.S.
Happy voting day indeed. I got my ballot in the mail a few days ago, Jim, and glad to be done with it.
Well, it must have been a tough choice walking into that booth when you have two candidates that nobody likes.
That's true. We haven't had an election in a while where more than half the population will roundly despise the new president.
Anyway, the markets seem to think that they know what's going to happen. What do you think they're telling us right now?
Well, actually they don't. You know, we have a guy who's pretty good on reading standard deviations, and he was looking at the VIX a few days ago, and he said, you know, the VIX is essentially discounting a possible 1,000 point move in the Dow either way, meaning a 2,000 point swing. And if you went out 4 days beyond the election, the volatility skew was still really high. And what he concluded was that the VIX was saying that there might be a close enough election that the outcome would remain unsettled for a few days. But we shall see.
Well, I guess it's better to have the ballots decide it than the stock market.
Well, that's true. It's, I mean, if you try to figure out what the stock market is trying to tell us, you could go crazy. You know, that's why I kind of hunker down on the charts and let them speak for themselves. You know, I was looking at my point of view, my opinion has been very bearish. You know, we've seen the stock market go higher and higher over 6 consecutive quarters of declining earnings for S&P 500 companies. And we've also seen the leadership narrow so that only 5 stocks, IBM, Caterpillar, a couple of the dividend-paying stocks, 5 stocks accounted for something like 81% of the Dow's gains over 2016 so far. And so, yeah, it's really a pretty narrow band of leadership. And but even so, I'm looking at a chart and I'm thinking, geez, we're within spitting distance of triggering a signal in the Dow that could augur a 1,500 point rally. You know, as bearish as I am, looking at it from a purely technical standpoint, which is how I try to look at it because I'm always wrong when I guess, I could see Dow 20,000.
Well, what does that do to the average person's portfolio? Does it do much, or is it spectacular in looks but poor in performance?
Well, I'm not sure. The average person is somehow is vested in the market. Even people with no interest in the market. Let's say some teacher lady from Minnesota. Well, her pension fund is pretty well invested, and some of the not just the high flyers, they're invested in hedge fund offerings, private equity offerings, and this and that. And so the mix of investments, we're all kind of in it up to our eyeballs, whether we know it or not. So, you know, in that respect, I guess higher and higher stock prices float everybody's boat.
Gold was up over $1,300 an ounce over the last couple of days. It's gone down again. Is that directly related to the market?
In a way, although I don't think gold really knows what that relationship is. It's just kind of jerking around. We seem to have a whole set of reflexive reactions built into the market each day, so that if stocks are up significantly, it means that gold has to be down, and it means also that treasuries are weak, treasury futures, and it's like there's so many locked trades at the moment that are on autopilot that I guess we'll have to wait till the election's over and things settle back to normal, whatever that is.
Well, I know everything now is done by a robot. Do the robots have built-in emotions?
I wouldn't call it emotions, but the robotic traders, the algorithmic traders, have their own quirks. Ultimately an algorithm is going to have at least a little bit of a human factor in it, because the algorithms themselves have to be designed to cope with the irrationality of mass hysteria, for one. So, the thing about the algorithms is that the good ones work for a while and then they don't, and then you just have to sort of move on to something new. And the cutting edge of algorithmic trading is really white box trading, where not a black box instrument, but a white box, where you're essentially generating algorithms on the fly, so that the variables that change in the course of a day or a week are changed in the algorithm itself.
And of all those people, of course, who hated math may end up in the financial industry and have to use it anyway.
Well, the math majors have that. They've got that fatal flaw, really, that even though the math works out to 4 decimal points for places for some of the things that they do, they haven't really seen the market at its craziest. And of course, if your algorithms are designed to cope with some craziness, it's in the nature of the markets that they will extend the extremes of that craziness beyond the horizon of any mathematician or his trading algorithm.
And also in China, where they tried to stop a decline in the Shanghai index by just stop trading at 7% down or something. Somebody said if they had just let it go to 8 naturally, it would have recovered naturally.
Yeah, there's a lot to be said for letting the market do its thing. And the U.S. markets, we've got our own circuit breakers so that certain futures contracts can't trade higher or lower than a certain amount each day. And but even the people who design those circuit breakers dread the day when they have to use them, because when you simply shut down the markets, it allows anxiety to build up until they reopen.
Well, it's like the old theory about so many people are laid off or fired on Fridays, and it's very frustrating because you can't call anybody over the weekend to look for a new job, but if you're let go on a Monday or a Tuesday, at least you get the frustration out by attempting to, regain employment, and by the end of the week, you're a little more settled with it.
Well, that's true. I think I was last fired on a Friday myself. Low ebb in my life. I've been mostly self-employed, but for a while I worked for somebody else, and they fired me on a Friday, and I did experience that anxiety.
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, it seems to me every week now, OPEC or somebody who produces oil says we're going to go along with a production freeze, and then they say, no, we won't. Now we hear Russia again is saying, if there was a freeze, we'd go along with it, and the price of oil goes up. Are these people just going to keep talking this game to try to keep oil up higher than it probably should be at this time of year?
We've talked about that before, and I think that the phoniness of it all is really kind of in our faces. A true bullish story on crude is invariably going to be it's going to come from a demand side story. In other words, the global economy is picking up. China is really revving its engines, and there's the case for increased demand for energy resources. But instead, throughout this whole, the bear market rally in crude, we've had a story that was driven by supply. The idea being that if, heaven forbid, there should be a curtailment of supply of natural gas from Iran, or Venezuela should collapse and output of crude ceases, then we're all in big trouble. But these are all speculative ideas that come from the supply side, and to me, you're never going to have enough curtailment of supply to keep prices buoyant at a time when the actual global economy is skirting with recession or worse.
And also, I noticed with the OPEC announcement that perhaps we'll freeze supplies, just about every member of OPEC said, hold on a second, though. We're a special case. In Iraq, we're busy fighting a war against ISIS, so we shouldn't have to cut back our production. Venezuela is starving due to mostly political incompetence, but they're saying we're a special case. We shouldn't have to freeze production. Well, by the time they finish talking, everybody's a special case.
Right. Even Saudi Arabia winds up being a special case because, they've gotten used to the good life there that has been possible with a lot of revenues from oil. It's hard to believe claims that Saudi Arabia has fallen on hard times, but they have implemented cutbacks with respect to things that are funded publicly, and they've gotten used to the fatted calf. So Saudi Arabia winds up being a very important producer at the margin that can put the kibosh on any supply curtailment that Russia is talking about with Iran or whoever. Basically, they're all desperate or greedy for more oil revenues. It's the cheapest way to make money, just pumping something out of the ground. And that's why we're not going to see any collusion to succeed. Any collusion that would attempt to push oil prices higher succeed.
Well, wasn't the whole push to lower prices started by Saudi Arabia because they were trying to kill the fracking industry in the U.S.?
I'm not sure. I think that's plausible on its face, but I'm not sure that that the Saudis would have opted for that strategy. Fracking winds up being it's pretty nimble. It's not like sinking a deep well in the North Sea or something. The cost of setting up a fracking operation relative to these seaborne platforms is relatively low. So fracking is you can kind of pack up your equipment and cart it off, but also when prices improve, you can bring your fracking machinery back. So I don't think the Saudis would have thought that they could kill off fracking simply by, pushing crude prices one way or the other.
I know the Saudis, too, used to brag, if it was $8 a barrel, we could still make money. Well, at $50 a barrel, they're not making money.
Yeah, that's true. I mean, we've seen that experiment play out in real time, and as far as subsistence at $8 a barrel, I think they would much prefer to be at 50.
Rick, taking a look around at other places people could put money, where's a good bet right now, or bets?
Well, I keep talking about long-term treasuries, and I think they're a better bet now because we've got this drumbeat going on about how inflation is coming back. Let me assure you, inflation is not coming back. We've got inflation will always be limited if the wage component of it is being suppressed. And the idea that we're going to have some explosion in wages that's really going to drive inflation is absolutely ridiculous. When you look around at who's doing which jobs, you can see that nobody's going to get overpaid a few months from now. That the wages are never going to catch up with cost increases in certain other areas of our lives, most particularly healthcare and college tuition. So we're not really the odds of an outbreak of inflation are remote, and that's why I think that the sell-off that we've had in long-term treasuries since July is at or very near its corrective end. Specific targets that I put out for interest rates on the 30-year, I think, are it's like 2.658%. We're just about there, and I'm looking at a lower end corrective low on the T-bond futures. This is the December contract at 158. So when those thresholds get hit, I think long-term bonds will be the best play out there.
I know everybody keeps waiting for the Fed to put up rates, but effectively it's mortgages and bonds that really control what happens with interest rates, isn't it?
Well, there's certainly there are market forces that have come to bear on bonds to cause them to sell off as they have, and in effect, the tightening that the Fed has that they've been blathering about for years has been accomplished by the market. But as to the Fed's monthly announcement that hey, we're leaving things unchanged now, but we're going to tighten in next month, I continue to say that true Fed tightening is about as likely as a Martian invasion. And if the Fed is purporting to manage our expectations with these idiotic announcements every month, which only the only believers they've got out there are the news media and economists with PhDs, but the Fed is not going to tighten, and that you can take that to the bank. Maybe they'll go 25 basis points, but that could be close to suicidal anyway. So we're not going to see any significant tightening by the Fed.
Well, it seems to me OPEC talk and Fed talk are about the same thing. A lot of noise that doesn't do anything.
Yeah, they just kind of blather on, and you wonder at what point they lose credibility, even with the news media, which has been all too happy to do this recurring story about, well, no tightening on the last FOMC minutes, but it's definitely coming in December. And when you look at the almost definitelys in that sequence of stories, you realize what a con job it's been.
Well, if they do it once every 9 years.
Well, I like to say that I've been more or less alone in saying that the Fed wouldn't tighten for all those years, and that I've only over those 9 years I've only had one miss.
That's not a bad average.
Well, just put me down for one more month of December that they're not going to raise interest rates.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He was speaking to us from Colorado. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.